So, hello, and a massive hello to everybody. Hope everybody's having a great weekend wherever you are, whatever you may be doing. 50 pips rocking and rolling here, 10th of March, 2019. No trade calls, recommendations, every response for their own stuff. So remember, we've got time change in the US. So for about 3 weeks, there'll be 1 hour difference, the usual with non-US. So some things may be a little bit out of whack. It should be a fairly interesting week as we'll have to see how the market reacts to the 60-minute interview with Powell. We've got retail sales out of the US. We got Powell speaking again on Tuesday. We've got GDP out of the UK. You know, that Tuesday, Wednesday, we're going to have the Parliament Brexit vote, so that could be interesting. On Friday, we got BOJ, but really, we've got an awful lot of headline risk with more stuff out of Mueller potentially. China still very much on deck, and especially with Brexit. So it should be a very interesting week. And don't forget, it's quad witching. So traditionally, you know, OPEX weeks tend to be bullish. I mean, this one has been recently, some of the stats have been a little bit weaker, but globally speaking, should be bullish. Let's see what happens. But a lot of moving parts and a lot of things that should be happening. So again, an interesting close to the week with that nice, beautiful little ramp up to fill those gap downs on the indices. We discussed that in detail Friday in the webinar, and it was a very, very interesting confluence of points with a lot of intramarket things starting playing out together. It was a beautiful little long. If any of you guys here subscribe to the video service are not in the weekly webinars, send me an email I'll send you guys a complimentary link to listen to the recording of Friday's session, webinar session. If you have time, it's a 1 hour. But I think it's interesting to see how we played the long side for those gap fills, and especially reading off the different intramarket charts and what was going on. I think it's a very interesting discussion. So if you have time and you want to, send me an email and I'll send you the link so you can review that. Now, what else going into this week? So again, it's all about those pivotal levels, right? So remember, we've got into that 2,800 rejected on the ES, 26,000 rejected on the YM, 16,000 pure on the Russell, and we're right back hovering at the 7,000 on the NASDAQ. Now remember, our control chart, our favorite chart, is the Russell. In terms of, it was the first one to roll down. It was the first one where we had those aggressive shorts on, and it came back, and there was a pure little reversal there with very tight risk reward to play for the roll. We'll look at that in a little bit more detail. And here, after we broke above 27 and 25,000, YM and ES are failing where we would expect them to fail, and the NASDAQ, which is being sidelined and funky, is just hovering around that 7,000 mark. Now, you can see if you go back and look at these on the dailies now, just to stay around those pivotal levels, what most people, I suspect the talking heads too, will be talking about those 200 DMAs, right? 200 DMAs, 200 DMAs, and 200 DMAs. So that's something to look in terms of general sentiment throughout the week. Do we keep on closing above or below the 200 DMA? And but seeing the way we close, looking at how we'll open in the overnight session, and keeping in mind that essentially this is going to be a quad witching day. On paper, and things don't always play textbook style, but on paper, what we would expect would be to see, ideally, would be to see a little bit of a ramp back towards that 2,800, back towards those highs. That gives us a chance to get better short location for the next leg lower. That's what we would be looking for this week. Just a reminder, I flanned up on all my equity shorts and played the long side on Friday. Now I'll be looking for some more shorts sometime this week. I flanned up on my bond ZB longs. Still could have some little bit move to run. We'll review that too. So that's pretty much what we would be looking at in the equities. I'll look at them in a second, but I just want to go through some of these charts. The other one to watch is the XLF. Remember, this is a pure failure at a key pivotal zone, As long as it holds below, as long as any rally still gets sold here around this 26, 27 mark, we expect this to roll all the way back into the 23s. And you can see on a daily how pure this one, also similar to the Russell, a lot of nice tight chances to get short here on this false break around this 200 to get back short for the move. And this has been a leader. This has been a very nice chart. Then, as we said, you know, the FANG's been going nowhere, right? And that's the NASDAQ stuck around that 7,000. You see how it tried to break up, but essentially it's still stuck. It's still going nowhere. We just have to be patient with this. And then just some people emailed in asking what's the deal with Boeing. No change for us on this failure here on Boeing. We're still looking for it to come back at the very least and fill this gap. So as long as this level doesn't get taken out, we're still in play for the downside. So no real change there. So again, this is the Russell. That's what we'd be looking at. If you guys remember, this was very, very tight play. See, we had about 1% risk. You know, if this rolls, there's a lot of room for this to go, but this is a very, very nice trade. Just keep in mind that you might see bids coming in ahead of this area, ahead of this confluence of the two moving averages. So what would be healthy would be to see this kind of move, right, as we discussed in the other chart, and that gives us a far better selling opportunity. You want to look at the Russell. And in terms of SPX, a lot of people asking, I know a lot of you guys are trading SPX and focusing on SPX. The move's quite pure, right? Because remember, this is the chart which we've been looking at for a long time, right? This was basically the chop zone. We had the mid-range of the chop zone, and when we came back down, it held the 200-week beautifully for the long, massive rip. Now, we were not expecting this to have a gazillion positive weeks in a row with no pullback at all, but this is behaving very, very technically. So if you go back, well, let's stay here. Where is it failing? So again, highs to lows. See, right at the 78.6, pretty much flat on here. So now this is really game on, right? Is it going to hold the mid-range? And we expect it to do so in the short term. And is the rally going to be, let's rip their heads off, go higher? Or is the rally going to get sold for the next leg lower? Now, we feel we're a lot more in the camp of that leg with headline risk across the board, headline risk out of Mueller, the fact that the China deal completely priced in it. It doesn't look like it's going anywhere. But you see here, right back into this area, 78.6, that's the failure. That's where it tried to catch everybody off guard, and then the roll. Remember, this was where we said we would not be surprised to see that Monday opening, 2 Mondays in a row being the high for the week. Then the previous Monday, it got bid back up. Last week, it held as the high, it held, and the aggressive move to the downside continued. So here, what I would be watching is no real change, is what happens around this 2,700, right, and these confluence of these moving averages. Now, as we always say, nobody really built a long-term track record, 10, 20-year track record, always playing for the outlier moves. We want to focus on the percentage play moves. So here, that's why we flattened up ahead of this and we tried to trade tactically to the long side. What we expect is for this to try and rally. We don't want to fight flows. We don't want to stay aggressively short fighting flows into OPEX week. What we want to see is we want to see if we get a better tactical opportunity to sell. And again, it would be looking for some strength coming in here, a little bit more squeeze, and then towards the back end of the week, looking for shorts. It might have to be on next week, but trying to start to build some more positions, but still expecting this to hold, and for this rally that we'll get here, or a little bit of a bounce, to open up the next move, which, you know, we would expect to see back towards the 2,600 mark. And then, you know, we'll continue to play, but that's what we would be looking for. Now, in terms of ZBs, this is a tricky one here. Now, and we're playing the long side also because we'd lighten up a little bit on the shorts, so we didn't want to have a lot of short exposure overnight, but we were comfortable having the long exposure overnight on the ZBs. I mean, here you can make a case both for this being some kind of, you know, inverse head and shoulders basing pattern to rip up hard, or the fact that this is going to be staying heavy. Then it also depends what your view is on the dollar, et cetera, et cetera. To us, it still looks very, very choppy. I don't think we could get aggressively bullish unless we see daily closes back above this level, and we can't really get uber bearish unless we get closes back below here. So we expect this, like we'll see on the DXY, to continue to be a very, very choppy zone, and prefer not to have any open positions here. But you know, it could try and probe higher, but right here, not enough, not cheap enough to buy, not expensive enough to sell here. If we go into CL, what we said is our base case was that 55 was not going to go without a fight. And there's a beautiful little opportunity to get long here on Friday too for a day trade. And right now, nothing much has changed, right? This is the chop zone, and the market's still trying to hold, trying to defend that 100 DMA, trying to defend that area. So as long as this holds, expect this to try and rally back up into the 60. If this was indeed just that little bit of covering, a little bit of Friday funky action, this breaks, then below here, we would not be surprised to see this accelerate very quickly back into the 50s. Again, not expensive to buy, not expensive enough to sell, not cheap enough to buy here if you're flat, in our opinion. In terms of GC, what we discussed is we'd be flattening up on our shorts and looking to try to build some long exposure again. We expected this to potentially be able to come back into this zone, and indeed it's holding. So the big question now this week is, as we go into the beginning of the week, are these 1300s going to get smacked down? And likely this will break, and that means we're coming back to that 1250. Or was that it? Are we going to get some Momo back above the 50 here, and we're still in play for the rotation higher? I think if you don't have a position here, I don't think it's that interesting to open up new positions right now. If you've built some longs, or start to build some longs, clearly it looks like it's a decent entry, and it may have some legs. If you're short, I'd really be trying to line up here. But again, similar to, no surprise, similar to bonds, similar to DXY, similar to crude, it's kind of like sideways here, right? And looking at the DXY, as usual, we've been seeing a lot of shorts getting excited as soon as we have a couple of down days, and then a lot of longs getting excited as soon as we have a couple of up days. But our base case is still chop. We've been playing the short side quite tactically, but here we're still completely chopping around this zone, right? So there's no big change for us. We would only start to review our bearish thesis if we get daily closes above the 98.00. At that point, we'd expect the 100 to clearly be in the cards. But right here, we're still sticking with a bearish case. So we'll have to see what's going on here. Now, in terms of GBP USD, again, an awful lot of headline risk with Brexit. We'll have to see what's going on. The 4-hour reversal on cable, pure little setup here, we'd be flat on that if you were just trading the reversal. We're expecting it to come back into this confluence of moving averages. As we said, we'd be flat on this trade. You could still argue that globally this is still trying to hold that rotation higher. If you have a view on Brexit, if you're trying to play that, then this would be a very nice place to get long if you wanted to get long. And if you think this is a accident waiting to happen, you've got no reason to flatten up your shorts, you're still holding partials because you still think this is going to get worse before it gets better. We don't currently have a position. We'd be flat on those shorts here, but we still expect this to get uglier. We're expressing that view through Euro GBP, not through cable. In terms of Euro, again, stuck. We expected this on ECB day because we didn't what came out for us was a little bit of a surprise in terms of timing, but not in terms of content. So we expected the Euro to hold the 112 on Thursday from a closing basis. When it gets so low on a day and it can't bounce, chances are it's going to get taken out in the overnight session, right? It's just too easy on the low vol. And indeed, it got taken out. So, we're clearly wrong on that on Thursday, but then it held. So again, we're just going to divert back to what we said on Thursday. We don't think the changes from the ECB. I think it was a surprise the market has to digest, but we don't think it justifies a sustained hold below the 112. In terms of technicals here, not surprising to see an inside day after a big range day, and right now it's holding. So unless you get a day close below the ECB low, what we would expect is to very least it to try and probe the opposite side of the ECB range day, and that would be 113. If you're swing short, clearly this is you've got no reason to cover. You'll probably be looking to sell any bounce. And if you got long on Thursday, Friday, there's no real reason to cover unless you get daily closes below those lows. So this is one of those situations, again, where it looks like, most people have made their bed. And unless you get a much bigger move, there's no real reason to do anything about it. That's why we expect to see a lot more of velocity of move inside range, right? Here on yen, which is still our favorite expression of the kind of risk off and equity weakness and China trade deal priced in. Still best way of expressing that. That's still holding the short. Our base case is still that these lows are going to get retested. This is going to get retested, and we're going back to the 100. We'll have to wait and see. It's been extremely choppy shorter term, but you see that we're just seeing a lot of velocity of move inside this range, right? With the puke here, and here we're seeing a steady move higher. But as long as we don't take out these highs, it's similar to the DXY. It's still chopping around, right? This was another one, had a very nice opportunity to trade this on Friday. Again, if you ask for access to the video on Friday, you'll probably see that too. We discuss this in a lot of detail. But right now, also the question is, a lot of people be asking, why haven't you posted more stuff on Forex? Well, because there's not that much going on, right? On the Aussie, AUD, USD, again, structurally, we're still extremely bearish. We took profits on our next leg of our shorts here. As we said, you have to respect this support. You can't get short or add shorts into a brick wall. So we flattened out all our shorts here, and we're expecting to see ideally a shortable bounce here, right? So we're sidelined here. If anything, if you want to be aggressive, this is an interesting play to try and play for a little bit of the upside, but we have no position here. And on Kiwi, very, very similar development. We took profit on this leg of the shorts into these lows, and we're waiting to reload. We're waiting to see what happens. So that's pretty much where we stand. We'll have to see what's going on. It should be an interesting week. Just another side note, if you remember, we said that in March, I was going to try and record all those videos, which are more of those Ask 50 videos, right, on specific topics. And I put a blog post out on that. Now, surprisingly, to me at least, because we had some questions come in, I had a bunch of guys, of you guys write in saying, hey, 50, really don't want, ideally, why don't you just do more trade videos, or try, if you're going to add some content instead of doing those questions, which could be an interesting long, why don't you try and record more videos like morning updates to give us a steer of what's going into London. So I was a little bit surprised, because I thought the whole series on, on those questions we discussed on the blog post, people would be interested in that, but I saw a couple of people write in. So just write in, let me know what you feel. Let's see what's happening, because I don't, maybe it's going to be better that what we do is we try and add, instead of doing one of those videos a week, we'll try and add one or two morning updates, 10 minute morning updates systematically into London in the morning, just to set everybody straight for the day. And maybe we could do that. If we're doing these on Sunday, maybe we could just scrap the idea of those Ask 50 videos and just do a midweek update, systematically one on Wednesday, and then see if we add another one. So write in and let me know what you feel. Guys, wishing everybody an awesome one. Take care. Have an awesome one. Bye-bye.